Hello, chart watchers, and welcome to this Monday, June 18th Market Watchers live show with your hosts, Tom Bowley and Erin Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, we've got a new week started here. You can see the Dow Jones Industrial Average taking it on the chin today, down 170 points currently, but off of the earlier lows. The S&P 500 down 11 points, the NASDAQ down 16, and the Russell 2000 actually up fractionally today, outperforming on a relative basis once again. The 10-year Treasury yield had opened lower earlier today, but it is currently up fractionally now, 2.93%. Volatility had soared earlier. You can see it up near 14, but it has pulled back now currently at 1280, still up 7% on the day. Energy leading the market to the upside after a really poor day on Friday. You can see potentially a piercing candle, which is a reversing candle. We'll see if that continues into the close. The Consumer Staples Group, which had a really strong day on Friday, certainly performing much better here in June technically. We do see some profit taking today, though. The group's down about 1.6%. Internet stocks breaking out to an all-time high today. That is certainly noteworthy, looking to close for the first time above 1,800. Biotech's heading in the opposite direction, down 30 points today. Off of really almost getting above that 2,000 level. You can see on Friday we went above 2,000 for the first time in a couple of months. Couldn't sustain it, though, and we are turning back down now, testing that rising 20-day moving average. Within the internet space, Facebook having a very strong day, moving to an all-time high and trying to get above the 200 level, and the biotechs being led to the downside by Biogen, which is down 18 points today, gapping down below its 20-day moving average. All right, we start out a new week. Erin, how was your weekend?
Well, I had a great weekend, of course, with Father's Day, spent it with my dad and my cousin who just had a new baby. So that was a lot of fun. And I think you had a pretty good weekend, if I recall.
Yeah, I got to play some golf and spent time with my son. So all in all, good weekend. Traveled out of town into the Shenandoah Valley. That's where I grew up in high school. And so it's always fun to go back. So, yeah, it was a very, very good weekend, no doubt.
Yes. And now we head into a brand new market week.
Yeah, I don't know where we finished at the end of last week, but I'm guessing it probably was in that neutral zone that we had talked about as we headed into last week. I mean, we went up and then we kind of came back down. So I'm thinking we probably closed fairly close to where we started the week last week. So I think we did get that neutral week. And then got off to a rough start this morning, a lot more talk about trade war and so forth. I wrote about that in my blog, but with the volatility index down 11, 12 area, the market tends to shrug off bad news or bad headlines, and seems like it's trying to do that again today.
Yep, indeed.
So, but we do have a busy week ahead planned, so I'll let you go into that. Today's agenda, we'll get going.
Absolutely. All right. Well, I have a workshop coming up tomorrow, so I'll be working feverishly on that after the show. I'm going to go over momentum indicators. Grayson Rose will be in on Wednesday as our guest. He works here at StockCharts. That'll be great. And also another StockCharts member, Julius de Kempenaar, will be talking RRG on Thursday. So it should be a pretty good week shaping up right now. As for today, we're going to start off with, it is Monday, so we have Monday setups to start off the show after technical news. John Hopkins is going to be here for the earnings spotlight. And the 10 and 10 to 1, I already saw it requested in the chat room, Mazor Robotics. We just happened to pick that at the beginning of the show, so good choice. And I'll finish the show off with the DecisionPoint Report, let you know what to expect going into the week as far as what signals are and indicators look like. So let's go ahead and get this party started, as they say, this week started, and head into those technical news and headlines.
All right, sounds good. I do want to just point out, first of all, that it was a Chart Watchers weekend. And for some of you may not know what that means, but we do have a newsletter that goes out twice a month, usually the first and third Saturdays of the month. And if you go into the blog articles and then just scroll down here on the right-hand side, you can see a sign-up area. It's a free newsletter. We get a lot of really good information from a number of technical analysts and experts. All you have to do is type in your email address here, click sign up, and again, it's free. You won't be spammed. Just want to make sure I encourage everyone to do that because it is a really informative newsletter. A lot of us, including Erin and myself, we do spend a lot of time trying to give you some good information. I did just want to point out briefly that if you do go into this blog area and you pull up the chart watchers, you will see a number of articles. Julius, he was referencing John Murphy's intermarket analysis book in looking at the big picture in one picture, really taking a look at the asset classes. So really a big picture view. I've read John Murphy's books. I mean, it's absolutely changed my way of viewing the stock market. So Julius had a great article. You can see Erin discuss sentiment, was highlighting all the very high bullishness among active investment managers, and that could potentially be a problem. So you should check that out. Greg Schnell, I actually wrote my blog article this morning, Consumer Staples, have really started to put together a pretty nice streak here. And I noticed that Greg had talked about consumer staples over the weekend, that some of them were starting to hit his scans. I know one he mentioned was Archer Daniels Midland ADM, and a couple of other food stocks as well. I wrote about relative strength and how you can use that to build a portfolio of ETFs and/or stocks. You can see Arthur wrote about 2 continuation patterns taking shape in the XLI. Won't give away the information there, but it was a couple bullish patterns I thought were interesting. So make sure you take a look at that. And then, of course, John Murphy himself writing about the European Central Bank, the fact that they have been very dovish compared to what we've been seeing with the Fed, which is much more hawkish. They just told us we were going to get 4 interest rate hikes this year instead of 3. And so John was just taking a look at that, which I also thought was very interesting. But let's get into what's going on today. I do want to just say that there was one economic report out. June NAHB housing market index came in weaker than expected, 68 versus 70. This is a chart that I like to follow. This is the U.S. Treasury rates versus Germany. And I do like to bring this up from time to time as a refresher because I think it is really impacting what we've been seeing going on in the market the past few months. For those who haven't seen it, I'll just say real quick, anytime we've got rising U.S. rates moving up faster than what we see in Germany, we tend to see a strengthening dollar. Now, these red shaded areas are highlighted areas where we saw the opposite, where we saw the U.S. rates going higher in each of these 3 instances, but the U.S. dollar going lower in these 3 instances, which resulted in correlation that turned negative. And if you look back over these last 10 years, you see that we stay in positive territory most of the time because as U.S. rates move faster or move up faster than Germany, the dollar tends to go up with it. But when we've seen these inverse correlations develop, what we've seen after that, at least the last 2 times, is a huge move up in the dollar. And as a result, a huge period of relative outperformance of the small caps. And talked about this for the last few months, but that's exactly what we're beginning to see again with the dollar making a huge move up. We're back up close to 95, which I think is a really big resistance area on the U.S. dollar index. And you can see that the correlation now has started to turn back positive. But the U.S. Treasury yields have turned back up again relative to Germany. It looked like maybe we were starting to roll back over again last week, but we did come back up and put in another new high. So I think that bodes really well for the dollar to move higher. And look at what the small caps have been doing as the dollar has been rebounding. Small caps completely dominating its larger cap counterparts. And at the opening of the show, I mentioned the Russell 2000 up fractionally today, while the Dow and the S&P 500 getting hit to the downside. So this outperformance by small caps continues. And if we get the breakout above 95 on the dollar, I think that these tailwinds for small caps will continue. So keep an eye on that. The other thing that I think you need to keep an eye on is while the dollar continues to push higher, and especially if we get this breakout, pull up the U.S. dollar index just so you can see it. Got that 20-day moving average. And if see the PPO with the lower dollar index, positive divergence. We've gone back up through the 20, through the 50-day, and hit a key resistance area and backed off of it. I think this is a bottoming head and shoulder pattern, a reversing head and shoulder pattern. and a breakout above 95 would confirm it and likely send the index back up, I think, to challenge the December high that we saw back in 2016. If we move up that much in the dollar, I would imagine that the outperformance that we've been seeing in the small caps will continue. The other thing that you got to be careful about with the dollar strengthening like this is gold. So if you pull up the gold chart, we had a really ugly end of last week. And on the weekly chart here, you can see that gold on about this is a 3-year chart. We got up to almost 1375 to test that resistance area from a couple of years ago. But we have since started to roll back over. And notice that we got back up and tested the 20-week moving average and then rolled over and finished at a new low. This was a new low in 2018 on Friday, and that was after a very bearish test of that 20-week moving average before we pulled back. If you notice during uptrends, when we pull back, we hold that 20-week moving average, we keep moving up. But when we fail and go below the 20, sometimes that can be a big problem, especially if we were to show a little bit longer term chart here with gold. You can see that when we start these downtrends, that 20-week moving average can be very, very critical and very painful if you're long gold, hoping that we get back above it. So just be careful during these downtrends. The only significant uptrend, in my opinion, that we've had on gold over the past 5 or 6 years was the first half of 2016 here. Otherwise, I mean, this is a little bit of a steady push to the upside in 2017. But remember, we had a rapidly declining dollar that helped provide some some tailwinds for gold in 2017. I think we have the opposite as we go into 2018. So I think gold's rolling over, and I'm not going to be at all surprised if we go back and test that 2015 low. So you do want to be careful with gold. The volatility index I mentioned at the open, if we pull up the VIX, you can see that we're now back down around this 12.5 area. We're 1272 right now. If we look at a long-term monthly chart on the VIX, you can see that during the midst of major bull market runs, the VIX gets down into the low teens or even a little bit below that, down occasionally even getting below 10. But 10 to 12, 13, something like that, to me is the really just tells you how strong the stock market is. We saw it back in the bull market of 2003 to 2007 as the VIX went back down into that the low double-digit range, 10 to 12. And so after a little bit of a scare earlier this year, coinciding with that sell-off that we saw in February, we've worked our way all the way back down. And it can stay at this area for a long time, as we saw when we moved below 15 back in 2013. It was a couple years before we really made a significant push to the upside. And so I think we could be in for another continuing push to the upside in the stock market with the volatility index continuing to remain low. Mentioned consumer staples. Let's take a look at that chart, the XLP. You can see as we moved back up here, we took out this prior, what was support back in March. This was a March low, but notice we went below that level, which was about 50.5. Came back up and tested it, went back down again. Well, just recently we went back up above that 50-50 level, and now we're coming back down to test it. Watch that rising 20-day moving averages. If this is truly a move to the upside, we should see consumer staples bouncing off of that support level. Autos doing very well today. So let's take a look at that chart quickly. And you can see that automobiles have been on a tear for about the last 3 weeks. First, it was GM, then it was Tesla. Well, Tesla is continuing to move, and this is why we're seeing such strength in autos today. Look at Tesla taking out a very critical level at 360. If we leave a long tail up here today and close back below 360, that could be a significant top. But if we break out here, I think we could be heading back to test the all-time highs. Volume is strong, so we do want to watch this candle today without a doubt. AMD and Intel, two key chip stocks. AMD rising to an all-time high here, back up above 17. Intel got a downgrade. Erin's going to talk about that in just a second. Intel going the other way, trying to hold on to its 50-day moving average. All right, I'm going to turn it over to Erin. I know she's got some upgrades and downgrades for you, and then we'll get into our Monday setups.
All right, let's get started here. All right. I'm going to take a look. Well, I'm not sure we'll get to all these, but I know Intel clearly is going to be one of interest. So let's get right to it. All right, so I was looking at Intel. First of all, I was kind of surprised. You know, this is one that usually shows a lot of strength relatively, but clearly on the downgrade, we're seeing quite.
Erin.
Oh, no. Okay, let's try that again. How about now?
Yep, there you go.
Oh, thank you very much for letting me know. All right, so I'm going to go ahead and let's go back to where we were here. All right, so for Intel, what I'm looking at is a short-term head and shoulders that actually is formed up with a slightly rising neckline. But we clearly have broken down below that, and I found it interesting that, you know, the height of the pattern, if you measure that out, would put us right about at this area of support at this high back here in January, as well as some of these lows back in April and early May. So I would expect to see this shake out just a bit longer. As far as Intel, I'm looking for a drop down to 50. But at that point, I think our PMO might be getting close to the zero line, and it would probably be the time to get back in there if we can hold on to the longer term rising trend. All right, let's look at, we had 2 upgrades, so I'm going to go to those next. And this one's a great textbook case here. We had a declining wedge, and that is a bullish pattern. We got the breakout. And I like seeing the fact we're getting over this area of overhead resistance that, like I said, matches up here with that November consolidation zone, and as well as August tops here, lows back in October. So I like to see a lot of touches on my support and resistance lines, and I think that one's right in there. Got that beautiful breakout, and you can see that the 50-day EMA is just about ready to cross over that 200. I think if I had any concerns, I guess, with this one is the fact the PMO is rather overbought at this point, and the OBV has been sloping downward with price, so that really confirmed a bearish setup. But we ended up getting that breakout out of that pattern. And I like the way these EMAs are setting up. I think your upside potential here could be up around that $6.40 area. Another upgrade, Regions Financial. This one, you know, is right in the middle of a trading range. So to me, it wouldn't be all that attractive. Additionally, if you look at the EMAs here, they're doing what I call braiding. They're going back and forth over each other, back and forth. So we're clearly not in a clear up or down trend. So I generally stay away from that sort of thing. And you can see that the PMO has been rather flat. So with this upgrade, I don't find it attractive yet. Okay. 2, 3 more of a downgrades. We'll see what I can get to here. Chubb, a downgrade today. And I looked at this one, another textbook case. We didn't even need to see that downgrade for this drop below support. We have a descending triangle, and I had a flat PMO. We were on technically a buy signal at that point, but the PMO had already started to turn over with this decline. So I would look for lower prices off of this decline. I think you have to go to a weekly chart at this point to get a feel for Chubb. And as you can see, we're close to that, just a little over that 125 area. But this is, I think, pretty important support that ended up getting broken. And you can see the PMO and the OBV on the weekly chart still look pretty bad. Let's see, I'm going to get to this one very quickly. Hitting support. I wouldn't call it a double top because it's coming off of a decline. Main thing is hitting support. PMO is top below the zero line. You can see that Scooter is doing poorly. And then finally, Redfin Corp was also downgraded today. Another one that's really just been in a trading range, flat PMO, nothing too exciting. And of course, now with this downgrade, we're back right smack dab in the middle of that trading range. So I don't see much opportunity here, really one way or the other. And okay, so that covers those upgrades and downgrades. Let's go ahead and get started on our Monday setups. We'll have to see first, how did we do last week? So I know that I had, let me go over to mine. And I had PRSC, Providence Service Corp. And I got in, I guess, at 75.75, and the last right now is 77.43. So that was a pretty good pick. I think we did all right with that one. see. And you had, what did you have last week, Tom?
I had Merit Medical.
MSI.
Yeah,
I got it. There we go.
I think down probably about 1% or so.
Right. And let me go ahead and share that. Okay. Not horrible. I mean, let's see. When did you get in? We're still up, right, on this one?
Yeah, I think it was 49.95. So
Yep.
It's a little bit still continuing to consolidate. I still like it, especially if it holds over that 48 area.
Yeah, sure. We've got a symmetrical triangle here that could be interesting. All right, but this week, we're only as good as our latest pick. Isn't that what we say?
Absolutely. It's always on to the next week.
Yes, so I'll show you the couple that I found interesting on my scans. I ran my normal PMO scan, but I didn't get the kind of results I really wanted right off the bat. So I ended up adjusting it. Normally I have looking for a scooter over 75, and I just wasn't getting what I wanted to see. So I changed it so that I could find those that had scooters between 60 and 80. So they were just starting to, improve. And that seemed to give me some better choices. And that's what you can do with all of the scans. It's a great way to have a basic one and then build. So Ironwood, I thought looked great. This morning it had not actually had that crossover. It looks like it hasn't quite had that PMO crossover buy. But I liked the setup here as far as this double bottom. And I think you have some upside potential here all the way up here to that 1950 level. EMAs are now, set up in a good way. So I think, and this one hasn't really had the breakout just yet. But I think this one has some potential. You could also, I didn't annotate it, but there is a symmetrical triangle here, and that tends to be a continuation pattern, and that would continue this rising trend right here. RealPage Incorporated. This was another one I looked at. I really liked the way the PMO was shaping up. We have the rising bottoms on the PMO. Look at OBV has started to really move on this move that we saw started last week. And, the scooter's already in that hot zone area. So I thought that was pretty nice. And it's holding that 20-day EMA as support. Upside potential, $62 plus is what I'd be looking at. I think, especially now that you've got this big 1% move here, I think you could have a stop probably around 58.50, just below the 20-day EMA at this point. And I had TWOU, Incorporated. This one has pretty much a textbook rising triangle here, ascending triangle. You have that upsloping rising bottoms trend line and a flat overhead resistance line. And the expectation is a breakout from there, the length of the pattern. So that would give us some pretty nice upside potential here. Haven't had the breakout just yet. And really one of the reasons I didn't pick it is just that the PMO has been floundering. It is starting to get ready for an upside move, but we've had some twitches going on here. So this wasn't my pick, but I think this one also looks pretty good. And UUP came up, the dollar. And I'll be talking more about the dollar during the DecisionPoint report. But we've got a nice little flag setting up here right up against this area of overhead resistance. And, the PMO's already turned up. OBV is starting to trend higher. Scooter is starting to trend higher. So I thought UUP actually looked pretty interesting. And I am bullish on the dollar right now. So I'd be looking for that breakout. If we get the breakout, again, the pattern length is about 40 cents. 30 cents. So I would go with a $25.30 to 40 cent upside target. The one I picked actually was CenturyLink. And there are various reasons that I picked it. So I'll just quickly go into those. But first of all, the PMO is getting ready to turn up. It actually has turned up. It's rising now above the zero line. And I like to see oscillation above the zero line because that tells me that there's some internal strength going on there. Not thrilled with the scooter sort of falling down at this point, but we're starting to see a breakout here above this very short-term what was overhead resistance at about $18. And we're starting to get back above that. I think your upside potential is easily 1950, but you could get up to 21. But I'd set my stop probably around this 50-day EMA at this point. You could tighten it depending on the length of the trade you're looking at, but I think I would set it there because on an intermediate term basis, I would be looking for a move up to that $21 range. So I will take, okay, let's see, in at 1807, actually I'm showing 1805 right now is the last. So CTL, CenturyLink, is going to be my pick for the week.
All right. Well, you got a couple, I know for the last 2 or 3 weeks, I think you got a winning streak. So we'll see if you can keep that winning streak going. Looks like a pretty good one to me.
Yeah, I think so.
I like that continuing push to the upside. Nice trend line. That your PMO, of course, my PPO continuing to remain above that 0 line for the most part. So definitely a stock that has been moving higher. I think looks like a pretty good one.
Yeah, yeah.
Okay, let me see. I'm going to go ahead and pull up a bank.
Uh-huh.
And I'm going to go with Zion Bancorp. This is going to be the one that I go with this week. And I'm going to explain it a little bit more detail in just a second. But I do like the fact that it printed that nice hammer on Friday after taking out the prior low at the end of May. It is continuing to just consolidate here. It's off of a downtrend, which I like. I like to get these stocks when the RSI is back into the 40s here. Normally during an uptrend, an RSI down in the 40s is typically pretty good time, and it does coincide with the stock testing price support. So I do like it around here. The current price is $55.13, so that's what we'll go with. But I wanted to also mention with the banks, because the banks have been disappointing. I'm actually kind of surprised. We put in a higher low with the 10-year Treasury yield. Currently, we're sitting at about 2.93%, which is about where we were back in February. Yet when you look at the bank index back in February, we were at 505. And now we're sitting down here at 467. So the bank index has moved down quite a bit, even though the 10-year Treasury yield is about where it was back in February. And for those who aren't familiar with it, usually banks tend to move in the direction of the 10-year Treasury yield. A rising 10-year Treasury yield does tend to provide some solid momentum for the bank stocks as their net interest margins tend to expand when rates are rising. But what I found here over the past few months is that the regional banks, this is the KRE, which is the ETF that tracks the regional banks. Check out what's been going on here over the past 2 to 3 months as the dollar's been moving higher. We've also seen the smaller to mid-size regional banks doing much better, rising, while the overall bank index, which has a number of the money center banks, really large banks, really just going sideways. So you can just look at this one chart and see that the money is rotating much more towards those small to mid-sized regional banks as opposed to the large money center banks. So I think the 10-year Treasury yield is going to go higher. And I think that combined with a rising dollar is a good, kind of a good backdrop really for the regional banks. And I think Zion, which reported great results back in April, came back, filled this gap, and then took off to put in a new high, which is pretty strong considering what the overall index has been doing. I think the pullback's an opportunity here. So I think you've got pretty good support between, let's call it 53.75 and 54.5, right in this range. You had gap support before the latest earnings report that also was around 54. So I think these pullbacks do represent a pretty nice opportunity as we move back into this 53.75 to 54.5 area. Stock sitting at 55, but I think the reward to risk is pretty solid, especially if you are trying to move in on weakness. You can keep a closing stop, maybe 53.50 to 53.75. Target on this one to me would be 58.5 to 59. So I think you got a pretty solid reward to risk. So Zion is my pick, and that is the reason. But I do have a few other stocks. So, and I did want to mention Zion. Here was the relative chart that I had. So here you can see Zion moving higher. This was the bank index moving lower. So you can see that the stock is really wildly outperforming the overall bank index, which I think is really important. Continues to outperform the S&P 500, continue to put in higher relative lows, which I think is good. And that is all coming while banks have been underperforming the S&P 500. So if the banks do rally based on higher treasury yields, I think that Zion is a stock that could do particularly well. I'm going to stick with this, and let's take a look at a few of these other setups, trade setups. At Home Group, you can see that the specialty retailers have been doing exceptionally well. So you're in a very strong space. At Home just recently broke out above key price resistance at about 37. We got up over 39 over the course of the last week or so. We've pulled all the way back close to that breakout level at 37, and also the rising 20-day moving average. So I think At Home Group, I think, looks pretty good here. IMMR, this is Immersion Corp. Huge move up. I love this hammer that's printing on the 20-day moving average today. And you are in the software space, and you can see the software stocks have been extremely strong. So you got a really great performer that's pulled back to a key moving average and relative strength. We know that the software group's been strong, but this has been a very strong component within the software space that you can probably take a look at and see. I mean, this was a stock that was $6 back in November, and now it's 15 and change, but it was 10% higher, maybe a little bit more than 10% higher just a few trading days ago. So I think IMMR looks very positive and bullish here. Intel, Erin mentioned this one. I mentioned it earlier. Stock got a downgrade today. I don't know that I'm ready to pull the trigger on Intel right now, but if we finish back up close to the high of the day, if it strengthens this afternoon, I think that'd be a really bullish sign, because the most recent low here, after we had gotten the gap up, pulled back, filled the gap, and then moved higher, the most recent pullback's been back to about 53.5. And so if we can get back over 53.5, print a hammer on some pretty heavy volume, I think we could be setting a fairly significant low. And if you look, the trend here in Intel has clearly been higher. If we do close below the 50-day moving average, though, you do want to at least take notice, because it's been a few months since we've seen that. And you've got another stock like AMD going in the exact opposite direction. But here are the semis, which just recently, earlier in June, broke out to a new high. So I think you've got a pretty strong group. Intel has been struggling on a relative basis for about the last 6 weeks. But I think if we put in a reversing candle, that could change as we go forward. So Intel would be another setup. And then my final setup is Valiant Pharmaceutical, VRX, and had a huge breakout, increasing volume recently. It is down about 7.5% today, but it's testing that rising 20-day moving average. Now, this one's a little different than the other ones, because you can see pharmas have not been particularly strong. So you've been seeing a lot of downtrending, but VRX has been on fire relative to its peers over the past 2 to 3 months. So I think that we've got one of the stronger stocks within a space that has not been so great. VRX continues to outperform the benchmark S&P 500. But again, the real problem with VRX is that you are trading a stock in an industry group that has not been very strong. So those are the setups that we have for this week. You can look on your screen, take a quick look at the summary. Erin's picks, my pick. She went with CTL for her pick for this week. I've got Zion's Bancorp. We'll see in a week how they do.
Absolutely.
Awesome. Okay, well, it is time to move on, and we do have a special guest with us. He comes on every couple of weeks. We got John Hopkins from earningsbeats.com. This earnings spotlight is brought to you by earningsbeats.com. Earningsbeats.com provides high reward to low risk trade candidates. Earningsbeats.com only trades companies that have beaten Wall Street estimates as to quarterly revenues and earnings, and they'll teach you to focus on that combination of strong fundamentals and strong technicals. Learn to exercise the patience and discipline of an experienced trading service. Earningsbeats.com. Better timing, better trades. Welcome to the show, Mr. Hopkins. Did you have a good week?
I did. How about yourself?
I did. Happy Father's Day, by the way, and also happy Father's Day to everybody out there that enjoyed Father's Day this weekend.
Yeah, I mean, I enjoyed it enough to declare it should be more than one day.
Happy Father's Month?
Why not? Now, my kids will say it's Father's Day every day, but I say it's Kids' Day every day. So,
really
little difference of opinion. But boy, I had a great day yesterday. It was like, and people listen know I like golf like you do, and so I parked myself in front of the TV. You were out golfing, doing something, proactive. I was sitting couch potato with a couple beers.
Watching U.S. Open?
Yes. I mean, there's just nothing to me. I mean, you know how many people think that golf is the most boring thing in the world?
Yeah, probably just most people. Maybe not. Maybe people watching the show. I know our demographics. We probably have a lot of customers out there.
I don't find it too boring, and although it is great for background for a nap, I find it.
Cure for insomnia? Is that what you're saying? Yeah, no, but it was great. It was a nice, relaxing day, and
I will say though that the U.S. Open, first of all, it is. I'm not going to say every year it's the most challenging golf tournament of the year for the pros, but this tournament was ridiculous. And I, for the golfers out there, I think they'll get it. But watching, I think it was on Friday, maybe, Justin Thomas was playing with Dustin Johnson, and they both had putts that were going in the same direction, relatively same length. And Justin Thomas got up and hit his putt, and it was going toward the hole, and then it broke off like 1.5 feet to the right.
Oh, yeah.
So then Dustin Johnson gets up, and he aims it about 1.5 feet to the left of the hole, and he hits it, and it doesn't break back. And the commentator said, it was the wind.
I know.
It was the wind actually had picked up when Justin Thomas was putting. I mean, if you're not a golfer, you don't really get this, but normally the wind doesn't affect you when you're putting. I mean, the ball's sitting right there on the ground. You don't think the wind is going to putt, but those greens were so fast. They were like tabletops. And literally, if the wind picked up just for a second, it would throw the ball, 1 foot or 2 offline. I don't know how these guys even played this tournament. Phil Mickelson got pretty upset.
Oh, yeah.
Saturday. I don't know if you saw that clip.
Oh, I saw it. Yeah.
He ran up and hit a golf ball while it was still rolling, which is a no-no in golf. You can't do that.
I enjoyed that. I'll tell you one last thing, and then I got some stocks to talk about. But years ago, I was at a U.S. Open in Michigan at Oakland Hills Country Club. And I'll never forget, it was a great tournament, but the greens were like ice, okay? And I remember Greg Norman, they were interviewing him, and he said, he said, what I do is I go back to the hotel room and I get in the bathtub and I try to hit, practice in the bathtub, because that's what it feels like out there, the surface of the greens. And just like it was yesterday, Saturday, like lightning was ridiculous. But anyways.
All right, what you got?
All right. I did my article this weekend, Chart Watchers. Anybody listening who's not getting Chart Watchers, you just have to. It's free, and it's got some great writing. I look at everybody who writes there, and I did something a little bit different, this week. I talked about shorting stocks, and sometimes if you look at the NASDAQ, it got very toppy, and so we tried our hands at a couple of shorts, and it's the same principle when you're shorting as you're going long, in that you've got to have really tight stops just in case something goes against you. And you're doing this while having to respect the resiliency of the market. And I pointed out in my article, Tom, that we've really been in the bull market for, so many years. A couple of exceptions, dot-com bubble, 2002, and the Great Recession, 2008, 2009. And you remember well, when you were part of Invested Central, where we had so many short alerts out, and they were hitting left and right. But you try to short a market, that's bullish even now, and you better be prepared to be disappointed. And I've got a couple of stocks here that I just wanted to go over. Really interesting. One of them is Jack, J-A-C-K, Jack in the Box. And Jack in the Box popped on us after we put it out as a short. And I think, I actually I had to do the article on Thursday because I had some commitments on Friday. And I had written in the article that, we had a cover if it went back over the 50-day, which at that point was 86.15. And of course, I woke up Monday and it just kept going up. And so I think by the time the article actually hit, it already stopped out. But it's the same principle. We had a very tight stop because you go back and look at that stock and look how it just got hammered. Look at the 2 volume days, like the selling.
Mm-hmm.
And so it moved all the way back up, to the 50-day, which looked like a decent place to consider shorting a stock that missed earnings.
Mm-hmm.
But then you can see that it's just continued through it, and it proves how difficult it is to short stocks, Tom. It's been consistently true, and why we are very selective, in any stocks that we do. I have another one here, which is I've been keeping an eye on, which is DY, which is Dicom Industries.
Okay.
Look at that stock. When it reported earnings back on the May 21st, 22nd,
Mm-hmm.
it just got blistered, right?
Yep.
And now it's coming back, and it's making its way back to the 200-day moving average. So to me, if you're looking for a short candidate, I think this has potential. But again, you've got to keep a really tight stop on it, because if it goes against you and clears that, go back to May 22nd, when you can see that big red candle, the tail at the top there, if it clears that level, it could just keep going.
Yeah, definitely. I mean, I look at these a lot differently. I mean, certainly we're in a bull market, in my opinion. I think it's been confirmed now with the breakout of the NASDAQ and the Russell 2000. I think the rising dollar is the only thing keeping the S&P 500 from being in breakout territory as well.
Mm-hmm.
I think it's really hard to short. I mean, I'm not a big fan of shorting. I think that the money to be made is much easier on the long side than the short side in this kind of a market environment. But I do agree. I mean, this is the type of stock that if we were in a bear market, or even one that was a little bit more, consolidation, I think when you gap down on this kind of volume and keep moving down, that resistance around $100 is going to be very, very difficult. And I went ahead and put in another area here at about 102.50, because that was prior lows.
Yes.
I think this 100 to 102.50, I agree with you. I think that, if I had to take a position in this stock, I'd probably do it on the short side, but I'd keep a fairly tight stop on maybe a close over 103.
Yes.
I'd be looking maybe for a pullback down into that 90 area.
I think so. But again, the principle is the same, right? You just go in the opposite direction.
Yeah.
If you think about Jack in the Box, okay, where it went against us,
Mm-hmm.
it was less than 1%.
Right.
That we lost. And that has been, consistently what has, kept the gains, not the gains, but the overall performance is strong. Now, one last one on the short side.
Okay.
Is PLCE. This one actually worked. You take a look at PLCE, they reported back, let's say mid-May, and you can see the big move down, 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 and then look at that, it kept going up, 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 up. Mm-hmm. So when it got close to that May 16th high, that was a good place to short with a very tight stop. Mm-hmm. And you can see how nicely it pulled back.
Yeah, and I think on this one, there was a pretty big gap down on heavy volume back in March as well, after getting up, that 140 level, almost identical candles here, these shooting star candles, where we failed at about 140 and then gapped down. And then when we came back up this last time, we got up 139 and change, back down again. So I agree. This one to me is definitely sitting in a bear flag from I'm going to say 120. Let's just say 120 to 140 is the trading range. But yeah, I think back, if I had to, again, if we're up near 140 and I had to take a position, it would be on the short side.
There you go. And the last, I'm going to end with our chart of the week, which is actually a long.
Okay.
They say sometimes 2 times the charm, because we had this stock out when it was higher, and it went against us. We got out for a few pennies lower. It's PLAB. Photronics.
It's funny because I actually was looking at this one this morning.
Yeah. Now, I'm being a little, I've gone into conservative mode here. Because if you go back like to May 21st, the 18th, and even back a little bit, that 790 level to 8 has been challenged, a couple of times and held. Mm-hmm. So basically put the alert out saying if this thing pulls back to 8, we'll get in, we'll have a stop of any intraday below 785. So you're talking literally 15 cents. But I think if it holds, I think this thing could really turn and, had that nice volume on the earnings. And then it's just been steadily pulling back. But I like the reward to risk here. It's our chart of the week.
Yeah, big gap up here with earnings. I mean, the stock closed at what, 850 or just below 850 back on May 21st, and then gapped up to 990 or there.
Yeah.
$10 on really heavy volume. But that black candle tells me that definitely market makers had gotten a hold of the stock. And
Oh, yeah.
good sellers were all over it. But it did go back down. I was watching it. I had been watching it the last couple of weeks because I was looking for a gap support test. We've gone a little bit below that, but I was looking. Volume really hasn't been that great, so I'd like to see some kind of reversing candle on it. And maybe it's at this 8 level. It might even be all the way back down to the February low. We'll see. But it's one that's on my radar because if you do get a reversing candle, we could see a pretty nice rally.
I think so. So that's going to wrap it up for me, my friend.
All right, it sounds good. Everything else going well? We haven't chatted in a while. Been a few weeks, I guess, since
everything's going well. I'll mention that the next time around, I think the next Chart Watchers newsletter is 3 weeks.
Yes.
Because when you get 3 Saturdays in a month, I think they take off. So that one is going to include invitation, to a quarterly. We have a quarterly event when you get into earnings season. We're getting close. So by the time the next article hits, we'll be into July, and we will focus on the upcoming earnings season, including some stocks that might run into the earnings report, some stocks to maybe stay away from, and it's always really well attended. There'll be more details as we get closer, but looking forward to that.
Yeah, I did mention earlier I was going through the Chart Watchers. Really at the top of the show, just letting everybody know that we had a Chart Watchers newsletter out this past weekend. And I went through just briefly everyone's article. I didn't talk about yours because I knew you were coming in today. But I just wanted to point out that this was another article that was in the newsletter. This was John's article, and this was talking about shorting stocks that miss earnings expectations. Now, I still trade. Almost all of my trades are off of my strong earnings chart list. Companies that beat both top and bottom line. But this is the flip side. So for those that are interested in shorting and would prefer trying to short the market because maybe you think it's overpriced, maybe you just like to be on the short side, you are now keeping an earnings miss chart list as well, and that's where these stocks are coming from that you talked about today. Is that correct?
Exactly. And it's the same notion. If you're patient, let it get to a really key level of resistance, either price resistance or technical resistance. You keep a tight cover, just in case it goes against you. I think that under the right circumstances, you could make some money in some of these.
Yeah, and I just wanted to make sure I don't have the chart up, but if you go back, or I don't have the screen up, but if you go back into the Chart Watchers, John's article, shorting stocks that miss earnings expectations, is right there along with the other just earlier. So always a great time having you on here, John. Great. Glad you had a great Father's Day, and we'll catch up in a couple weeks.
Thanks so much. You all take care.
All right.
Bye-bye.
Okay. Yeah, it is. It's tough, Erin, to try and short this market right now.
Absolutely. Well, everything's really hard right now because it is so volatile. We're seeing, the volatility, the up and downside. So I think it's, really rough waters. So you have to be a bit more careful, I think, on the buy and the sell side. So
yeah, I think if anything, maybe some of the larger companies, because I do think they face the headwinds of the higher dollar. I think some of those currency translations that they're going to face this quarter, I think it's starting to settle in and it's affecting stock prices. So I do think, when we looked earlier, I'm not sure where it stands now. I can tell you the Dow currently down 150 points. The Russell 2000's flat. And that's really what we've been looking at for the past 2 or 3 months is the Dow and the S&P is where we're seeing most of the relative weakness. And we've been seeing a lot of strength in NASDAQ and Russell 2000, many of the mid-cap stocks and so forth. So anyhow. All right, well, it is time to move on. We've got that 10 in 10, and so I'm going to go ahead and let you get started with that, Erin.
Yes, let's take a look at what we have. Here is our RRG right now. I thought it was pretty interesting chart. Let's see if we can get it all fitting in there. Every now and then I like to animate it. It's so what I did is I looked at some that had, interesting tails and directions that made sense, but I also have managed to I put this by sector and industry so we can really get a cross section of everything. And the second symbol, though, for the 10 and 10 will be the most popular in the chat room. And right now, it looks like there's a tie between Gilead and Boeing. So whichever one you want to see, if you go into the chat room and like those symbol requests, we'll see which one gets pushed over the top. If it doesn't, I'll just pick one.
Sounds good.
So let's start with Mazor Robotics, MZOR.
Okay, I actually looked at this one on the daily chart. I thought the weekly chart was actually more interesting, so I pulled that one up and annotated that. You can see a big move up back in August of last year with increasing volume, took out the prior double top, and notice we pulled back, tested that area of the breakout, and then continued pushing higher. But as we kept working our way up in the early part of this year, you can see the higher prices and the lower PPO, weekly PPO. So we had a negative divergence here on the longer term chart. And all of a sudden, that rising 20-week moving average, which had been pretty solid support, was lost. And as we pulled back with that negative divergence, check out the volume coming in March as we reversed and started moving lower. That's a pretty good signal when you get a breakout with a negative divergence and then you come back down and you fail to hold the breakout level, especially with increasing volume, that maybe we're going to be in for a period of consolidation. That's what we've seen. We've seen MZOR pull back to its 50-week moving average, continuing to consolidate. Very frustrating trading. But I think it's kind of similar to what we saw back in the latter part of 2016, early 2017, as prices went sideways for a while. The PPO, which was extremely overbought, had come all the way back down very close to the center line. And then we started another move to the upside. And it seems like that's what we've got here. I would just say be careful if we were to break back much below $50, because I do think that the rising 50-week moving average is important. I think the price support level that we pulled back to at the end of 2017 is very important. So watch $50. I think we're in a range, though, from 50 up to about 75. And my guess is we're going to see 75 before we see a move below 50.
All right. And the most popular, which one? One, not Gilead. It is going to be Boeing, BA.
All right, Boeing. Well, I love Boeing. I think the pullback is an opportunity. We got some good gap support coming in right at about 351 or so. And just to highlight that level right here. So you can see with the increasing volume back on May 21, we had the huge gap up, went from 350 up to 365, came back down, tested gap support, and then broke out again. I think we're coming back down, testing this area of support around 350. I suspect that we will have another run back up toward the 370, 375 level. Short term, you could keep a really tight stop here. One other possibility, if you wanted to build a position, is maybe 350 first entry, 345. That was your breakout here before the gap up. You might use that because you got the 50-day coming in at that same area. But I would say 345 to 350 is really key support on Boeing, at least in the short term. And to the upside, you've got resistance back up near about 372.
Okay. Let's see. Number 3 I'm going to give you is ARWR, Arrowhead Pharmaceuticals. This is a biotech.
Okay, Arrowwood. Well, got to like the volume coming in on this breakout. There is a negative divergence, but I don't really pay much attention to negative divergences. Let me go ahead and just illustrate it here. Here was your lower PPO coming across. We could draw this line here. We could draw it up to here. Clearly, we have higher prices and lower PPO. The thing that makes the big difference to me, though, here is the extremely heavy volume on this breakout. I find it almost impossible to explain how you can say that momentum is slowing to the upside when you have one of the heaviest volume days over the past several months accompanying a breakout to the upside. To me, that is a sign of accumulation. It has keep in mind that one of the downsides to using the PPO or the MACD is that they only consider price. They do not consider volume. So it's not paying any attention. If you're getting a breakout on price and you've got low volume, then you're actually getting confirmation of that slowing momentum. But with heavy volume, I think this looks good. Only problem is it's going to be very overbought. Actually already is. We got the RSI at 78. So I don't know that I'd be going to chase it, but I think the stock looks good. And a pullback down to maybe $12 or just below at some point down the road, I think could be an interesting entry point.
All right, let's go on to HIG, and that is Hartford Financial, of course, full line insurance industry. What do you think?
Just meandering sideways here. I do like that it had gapped up on some nice volume back here in late April, but we kind of got stuck at about 54.75. Came back down, went a little bit below gap support, and I'm going to go down to this prior low here. And so I think we're in a fairly tight range, and we've just been going sideways. You can look at the PPO. You can see there's very little momentum. You look at the RSI, which is sitting near 50. It's just stuck. And so if you've been in this stock or you're in the stock or thinking about getting in the stock, the problem is you could just be sitting here for a while. I like to trade momentum. So this stock is really showing me no momentum. I'm not really seeing anything that's intriguing to me at this point. So I would do nothing, but I do think a breakout above 54.75 would be bullish. A pullback to test that 51 and a half area, I think begins to set up a strong reward to risk entry on the long side.
Okay. Let's go with CTSH as our next one. And that, let's see, where is that one? Yes, Cognizant Technology.
Yeah, I think overall, and I could go back to a weekly chart, but if you look at the lows are rising, which is good. Here was the key high in between. So I think we're in a range for now. We had the gap down back in May on very heavy volume, but we never lost that prior price support. So I think we're continuing to sideways consolidate. I like the volume that came in on Friday on the push back to the upside. I think you've got a couple of key areas to watch overhead. One is gap resistance at 82. This is where we closed at before we started selling off on this heavy volume. So I think we got a little bit more room to the upside before we begin to run into some difficulties with gap resistance and price resistance. We got a lot of tails in here between 82 and 83, and there's your gap resistance at 82. So that's going to be a challenge. And then finally, we want to get back up above those March highs, which is at 84. So I think in the short term, those are the two key areas that I would be watching to the upside. To the downside, I like the move up and holding the 20-day and then breaking out again. So I'd watch that 20-day to the downside. But CTSH, I think, looks pretty good, consolidating. But let's see if we can get through the 82 level. That would be bullish.
Okay. Let's see. I think it's funny that it's a consumer staple, but monsterbeverage.com. For some, I guess it would be a staple. Keep yourself awake.
Definitely an energy staple for sure.
Mm-hmm.
Yeah, nice move back to the upside. Monster has a really good long-term track record. I'll come back to this daily chart in just a second, but let me pull up the long-term monthly chart. I mean, when you look at this, it looks a lot different than the daily chart. Here's a stock that made a huge move back 15 years ago, straight up, sideways consolidated, and then has continued to move up and consolidate. And it seems to just be in one of those consolidation modes right now. Long-term uptrend, though. This is a really solid long-term stock. But in the near term, it's got issues. And so the first thing that it's going to have to do is it's going to have to take out this reaction high. It sold off on really heavy volume back at the beginning of March, rallied back to about $59. We haven't been able to close above that. And then we had the prior low, which was $62. So this is going to be the key area of resistance on Monster, I think, on the daily chart that we're going to want to watch. To the downside, I think it's very similar to what I was just talking about. I think this rising 20-day moving average should provide some really good support on any pullback.
Okay, another popular one, and the only one from the energy sector today, Schlumberger.
Yeah, Schlumberger. I'm going to pull this up on that relative chart. Because you can see we're trying to break back down below the recent highs. Not particularly good. Its group has been falling, and it's at a low for the last couple of months. You can see on a relative strength basis, Schlumberger, relative to its peers, hasn't been great, although maybe it's a little bit positive the last 6 weeks, but still not good. Relative to the S&P, not doing great, and its peers, really after having a relative breakout versus the S&P just 3 or 4 weeks ago, has completely fallen off the table here, back to the downside. So I just think there's a lot of confusion on the chart, both on an absolute and relative basis. And I'm not real happy that the stock, I'm going to just annotate, but the stock hasn't been able to hold on to those recent lows here, closing back down on some pretty heavy volume that was options related. But still, I'm kind of at a loss here with Schlumberger. I think it's a great long-term trade. I just, in the short term, don't like the fact that it wasn't able to hold on to this rising 20-day moving average. So wouldn't be for me. Longer term, probably a good value trade.
Okay. How about Boise Cascade, BCC? Looks like it's trying to consolidate sideways, but at the same time form a reverse flag. So,
yeah, I think it's come back down to test some key price support. Let's go ahead and just draw that line in here first. So there was the prior high. We pulled back, we went through, and we've come back and trying to hold on to this area. Also, I would say that we had a little bit of an increase in volume mid-May as we broke above these tops coming across here. So I'm going to draw another line in here. I'm going to say 44 to 46 is an area. We got the 50-day moving average also coming in. This is the level where we really want to hold on this pullback. I'm okay with BCC as long as it doesn't close below the 44 level on above average volume. I think we got a shot maybe to make another run back up to resistance just above 49.
All right. Since there was a lot of interest in it, let's go ahead and we'll look at Gilead anyway.
Yeah, I know the biotechs in general taking on the chin. Biogen, IDEX, BIIB is one that was really getting hit hard earlier. I think Gilead's just struggling with its gap resistance. So pull the chart up. Let's just draw that line right there. That's where we gap down. Look at the volume that came in back in May on the huge gap down. We got almost all the way back to fill that gap, and now we're turning back down. I'd like to see this hold the rising 20-day moving average. That would give me a much better feeling that it was going to go back up and go through 72. So let's see what happens today. But failure to hold the 20-day, then we'll bring this 68 level in as your next price support.
All right, drum roll. Here we go with number 10 from the materials sector, Southern Copper, SCCO.
Okay, I'm not a big fan. I did like the breakout here back in February, and we continued to move higher, which was nice. But now we've been downtrending for a while and potentially could be putting in a double bottom, but that wouldn't confirm until you went back up and took out 53. The longer-term trend line, let's annotate that. Looks to me like the trend line's been broken. So, yeah, I think we've got some issues here on the chart, but right about there, I think is a pretty good trend line. Lots of tests along this trend line. And then finally we broke down. Volume was expanding on the breakdown. We went back up, tested it, kind of back tested it from underneath, and now starting to roll over. So I would just say this. I think if we lose that support that we just had from 3 or 4 weeks ago, just above $48, we're at that level now. If we finish below $48 on a closing basis with increasing volume, I'd be careful here. Looks like the character of this chart is beginning to change to the downside.
Okay, let's go ahead. These are the symbols that we did just look at. I will have these up in the Market Watchers Live chart list where you can go and copy them and save them and annotate them. Just go ahead and go to the Market Watchers Live blog, of course, under the blogs tab, and you will find the link right there at the top of our main blog page. Okay, let's go ahead and I'm going to talk to you just briefly about ChartCon coming up in August. I can't believe it, Tom. Deadlines are now starting to arrive as far as our presentations go. So I'm going to be scurrying around here soon to come up with my presentation all the way put together. We are going to be looking at reducing risk in uncharted waters as our theme. And we have a bunch of great speakers. And no worries, you don't have to go buy a plane ticket and last minute figure all your hotel and all of that out. This conference is streaming live. So most of you will be watching it live, not live over the internet, not actually in Seattle. So I think it would behoove you to check it out. One of the great things is not only do you get to watch the conference live, but you do get the recordings. So you can go back and look at them and take notes if you'd like after the fact. So go to stockcharts.com/chartcon and you will find the agenda as well as all of our speakers and the registration link right there. Okay, well, we've talked about ChartCon, I think, enough for the day. I think it's time to see what is going on in the markets right now and have our final market update. Okay, so yeah, we've seen some not so great action as far as the large caps, as you were saying, Tom. They seem to be taking it on the chin because we are seeing the dollar doing better. It's strengthening, and that generally isn't good for your larger cap stocks. So as we can see, Dow gap down and is really consolidating mostly sideways at this point. We can see the S&P also gap down, tried to make a comeback, formed a flag. So we may see a breakout here, but currently S&P 500 down 9 points. NASDAQ also gap down, still not making it to positive territory, but also forming a flag. We can see that the mid caps, they were in positive territory, but fell back, trying to make it back up there, though, into positive territory. And interestingly, Russell 2000 is actually in the positive territory now and has spent the majority of the day in the positive area and territory. TSX not having much of a problem despite US market open. We're seeing a continuation of a rising trend. Right now getting a little consolidation, but I think that would be a good flag on a flagpole to keep an eye on in the very short term. Treasury yields are up slightly, currently reading 2.928%. Commodities also up slightly with DBC up 9 cents. UUP up for the day, but really consolidating the move from the last, since Thursday afternoon. We're really moving in a bit of a trading zone here between $24.95 and $25 for UUP. USO is up 13 cents at 13.18. Moving mostly sideways after a small gap up on the morning. Gold is down for the day, but not seeing a huge, not seeing a great amount of deterioration at this point. Really, it was on Friday where we saw the very difficult gap down decline. Right now, we're consolidating that move that we saw earlier, or we saw last week on Friday. The VIX did make it up to 1375, but has pulled back, and we're looking at 1275 for a reading. 1375, 1275, these are all still very low readings in the context of the VIX, where we've seen readings, well, certainly when we had the correction of over 40. So when I see 1250 to 1375, I'm not too concerned, as clearly investors are not too concerned. And that completes our final market update. And did you have anything you would like to add to this, Tom? I've got some charts I can get ready, or I can just go straight on into it.
No, I've got just wanted to pull up the small cap consumer discretionary ETF, because I've talked a lot about consumer discretionary and the fact that we've had a huge start here in the month of June. And this is the PSCD, which is the Invesco S&P small cap consumer discretionary ETF. So this is giving you a lot of exposure to the small caps that are in the consumer discretionary area. We've got consumer discretionary leading the market to the upside, and we've got small caps, which are outperforming because of that rising dollar. So it's not a shock to see this particular ETF doing so well. It's really been doing well since about the beginning of April. Huge move to the upside. We were down below 58. Now we're up near 68. That's a big move, while the S&P 500 has been really fluctuating, not going too far. And at the bottom here, you can see that after kind of going sideways, the PSCD relative to the S&P 500 has really broken out, made a huge move in the past 4 weeks or so, and really since the low back in March. And I could probably pull up the dollar. Actually, let's do this. Let me pull up the dollar and just show you that the dollar has been strengthening here off of this bottom back in January, double bottom really in February. And I didn't want to do the UUP there, though. Let's try this back again. So if we take a look at the PSCD relative to the S&P 500, here, when we hit this double bottom on the dollar back in February, from that point forward, you can see what's been happening on a relative basis. So not only is consumer discretionary doing well, but looking for small cap stocks within that space. If you're an ETF trader, I would think the PSCD is something that, as long as we continue to see the rising dollar, we're likely to see this PSCD continue to outperform the S&P. So with that, I will turn it back over to you, Erin.
All right, sounds like a plan. Okay, so let's take a look at this week's DecisionPoint Report. This report is as of today, June 18th on Monday. Okay. All right. Can you see my screen? Because I'm not seeing the... Yes?
Yep.
Okay, good. All right. So I'm going to start with the SPY. This is the ETF that we use for our market timing at DecisionPoint. That's where we determine for the market in general, the S&P 500, our market timing signals. So I thought I would look at this very quickly. And one of the things that we note here, of course, is that rounded top we're getting in the market right now. And we have some room to pull back a bit farther. And you can see that the PMO is starting to turn down. We're in a rising trend, though, on the PMO, and we really aren't at all overbought. I would expect to see a pullback continue probably into this week, and then we might get that bounce off of that support level right around, for the SPY, 272.50. I'm going to take us over to our... Let's go to the DecisionPoint scoreboards. I wanted to show you those. You can get these obviously on your Pro Control Center on your member homepage. You can just click here, and there they are, the DecisionPoint signals. And we have scoreboards for the 4 major indexes. I wanted to point out that the S&P 500, all of these actually have rising trends. All of our trend models are on buy signals for all 4 of these indexes. But this is where we have a little difference on the weekly charts. The weekly PMOs are still below their signal lines, except for the NASDAQ. The NASDAQ 100, we just got a new buy signal on its weekly chart. So let me go ahead. I want to show you that chart so you can see what it looks like. And then I'll give you just a quick review of the weekly charts on those other 3. So you can see how we're getting very, very close to those PMO buy signals on weekly charts for the other large cap indexes. So, you know, we hit new all-time highs. Not a surprise then to see that new PMO buy signal coming in on the weekly chart. I think this is very encouraging, obviously, with the NASDAQ 100 starting to come alive and not show that rounded top like we were seeing on the S&P 500. I think that's encouraging. Let's go ahead, and I'm going to show you the S&P 100 weekly chart. Excuse me. And you can see we're actually seeing a little bit of deceleration on that weekly PMO, but we're on our way up. The margin is still not really thin, but not really thick either. It surely could be beaten by the end of this week, but we would need a pretty sizable rally. So I think for the OAX, we're going to have to wait a bit longer to get that PMO buy signal on the weekly chart for the intermediate term. You can see with the S&P 500, the margin is a lot thinner. But again, we're seeing a little deceleration, and I suspect that will continue if we consolidate, or as I was noting, pull back to that, 2750 area, 2740. Certainly we'll see the PMO on the weekly chart decelerate further, maybe top, but I don't think we're going to see that unless we get a really deeper pullback than that. So I just wanted to give you an idea of those weekly charts, because we are starting to see those crossovers. Looking at the S&P 400 weekly chart, you can see we do already have that buy signal. Things are looking good, as we were talking about earlier. Tom was mentioning we're seeing the mid caps doing well. And let's look at the S&P 600 ETF IJR on the weekly chart. And you can see we've already gotten that PMO buy signal, and we're certainly seeing strength in the weekly PMO for the small cap ETF IJR. So we are looking a little bit at a bifurcated market, with the NASDAQ and the smaller caps doing better. But I suspect, as Tom and I have talked about, that is due to what we're seeing with the dollar, and it's starting to rise. I'll go over the dollar in just a moment. But let's look at our indicators first. Now this is the, I call them the ultra short-term indicators, or climactic indicators. These, like I was saying, I think last week, these are a lot like, candlesticks. These are the reading of this chart, those climactic readings, is what we're looking for here, to give us an idea of what might be happening into the next few days, possibly into the week. And unfortunately, I have to say, we're not getting the kind of climactic readings I'd like to see to give you some information as far as the very short term. We're just not seeing much at all. Although I would make a note that our net advances declines are slowly pulling back here. Declining trends, and that I would say is bearish in that very, very short term, which is why I'm still looking for that move back down to test these highs back from May on a pullback. As far as the S&P 500 is concerned, I think there's just a little bit more to work out here. And I think the short-term indicators really support this theory, in that they are, they topped right there in overbought territory, and they're continuing to head down, and they're not looking like they're interested in decelerating at this point. It looks like they are going to fall further. I will be really interested to see if this rising bottoms trend line here will be able to hold on these indicators. I am suspecting it will, just because we are starting to see those bits of strength there with the small caps and the technology area. So I think that there's a good chance we will see that rising trend line held on these indicators. And I think that would be certainly a good sign. And of course, anytime you get a turn up, anytime you get these indicators to turn up above the zero line, that shows you there's some internal strength. We haven't seen that over the last two times we've ventured lower on one of these indicator drops. But I'll be watching very closely. If we can get these to stay above the zero line, I think that would be very positive for the short to intermediate term. But right now, I think the short term, I'm still favoring the idea of a continuation of this short-term decline. And if I recall, Tom, we went in, both of us, and actually the audience as well, when we did the poll, we looked at it and everybody was saying that this week we would move lower. So I'm not expecting much out of this week. I think on the positive side, we could see just some consolidation, but I'd be looking again for that test back here of the tops, at that 2745, 2750 area before we start to see prices move back higher. Let's go ahead and look at the intermediate term indicators. I think this is interesting because although our short-term indicators are looking weak, I don't see that weakness coming through on the intermediate term indicators. Yes, we're seeing them top, the IT breadth momentum oscillator, the ITBM and the ITVM. We're seeing them turning down right now, but as I usually tell people, I don't get too concerned about these tops, because I rather wait for the negative crossover on these. And you can see right now, since that low back in late March, these indicators have been trending higher, and I think that is positive for the intermediate term. If I see that rising trend line broken, like I was talking about in the short term, then I would start to get a lot more worried about intermediate term conditions. But I think right now, short term looks weak. Probably, we're going to see a little bit more pullback. But when I look at these intermediate term indicators, I'm not so worried as far as another correction down, further. I think we're going to hold those rising bottoms trend lines, and we'll keep an eye on that, of course. Let's go ahead and look at the big four. I've made sure to leave plenty of time. The big four, as I call them, not the FANG stocks. As far as DecisionPoint, when we write our DP alerts in the weekly wrap, we consider we're looking at the big four as the dollar, gold, oil, and bonds. Those are four areas that everybody is very interested in. So let's go ahead and look at the big four. I'm going to start with UUP. If you recall, I picked this, well, I didn't pick it, but it was one of my Monday setups that I brought to you at the beginning of the show. So I think you can imagine that I am bullish on this chart. I am bullish the dollar. I'm expecting it to move higher. I actually had been writing and blogging that I figured we'd have a little bit more consolidation before we broke out above that 2470 level right here where we were seeing those October, November highs from 2017. I was expecting to see a bit more consolidation before this pop to the upside, but we got the pop a little bit earlier, and now we're forming a flag. There is this overhead resistance area at $25, but when I look at the PMO, it has turned up. 1.5 to 1.5 or 1.25 is the typical range for the PMO for UUP. So we're not into that seriously overbought territory. I think this move backwards that we got back here, that declining trend, I think that was excellent because that helped the PMO unwind and get to where it isn't too overbought before it turned back up. And that gives the PMO some opportunity to continue rising without getting too overbought when and if we get this breakout above $25. And the weekly chart for UUP, we got this nice breakout from this descending wedge. That is a bullish pattern, so it reacted as expected. And you can see as far as $25, it really doesn't line up with any of the support and resistance levels here. So that's why it's more of a short-term resistance area. But I would expect when I look at this chart, I think there's just some seriously great upside potential to that 25.75 area back here where we had the 2010 high. We could certainly look for prices to move even to that 26.75 and start testing those highs from back in 2016-17. So I would say the weekly chart looks very positive. There you go, that PMO buy signal as well. So as far as our number one of the big four, I would look at UUP favorably. Now, if you're looking at UUP favorably, generally you're going to look at gold negatively. And I've been doing that, but I have been watching a very short-term correlation. I'm going to just drag this down here. The correlation between gold and UUP. And this is a 20-day average. So it's very, very short-term look at correlation, but that's what I'm looking for on the chart right now for all of you. And, with Market Watchers Live, I try and keep a shorter term view. So right now you can see there really is no correlation in the short term. We have a reading of almost zero. So not positive, not negative. So gold is, in my opinion, on its own. And when I looked at gold, I've been calling this, well, since May. When we started to get this move up to the resistance level up here right around 1305, 1310 is the one that I've been looking at. And when we got to that level, we have just not been able to break above it. We're talking over a month of trying to build and get up above and close above 1310. We had that, opportunity on Friday. It looked like we might see that, but obviously, I'm sorry, this is from Friday. On Thursday, last Thursday, it looked like we were going to get that breakout. But obviously Friday, that was not the case. And we're seeing a huge decline, broke down below some support levels that should concern us. So I think gold is just, it's not looking good. You can see the PMO is topped. I just don't see anything good here. I would be expecting it to come down and test this 1265 level. And since there is no correlation one way or the other currently in the very short term between the dollar and gold, I don't think obviously that's going to have an effect on it. I do know if you look at a longer term correlation between gold and the dollar, though, we are still seeing a very negative correlation. So I would expect to see gold continue lower. Quickly, there's the weekly chart. And you can see this rising bottoms trend line has now been broken, and there was a close well below that rising bottoms trend line. So Again, I think we're looking for some trouble here in gold. You can see the sell signal that lined up. Certainly no deceleration. If anything, it looks like we might be starting to accelerate lower with the weekly PMO. So gold is not an area I would be excited about right now. Oil with USO. And we can see that $13 level is holding as support. PMO is still moving lower, but it's getting a little twitchy. It's not sure what it wants to do. We can see that 1325 is holding as overhead resistance, at least as far as today. This rising bottoms trend line was support, and now it's causing, it's posing resistance. So I could see a price rise in USO, but this is the really important signal to look at, and it's clearer in the thumbnail. But we just got an intermediate term trend model neutral signal. So I'm not expecting a whole lot out of oil. I would want to wait and hopefully see this PMO start to turn up. We're not seeing that just yet. And I think that area of overhead resistance at that top from last week around looks like 1355, I think that's what we're going to see hold. That rising bottoms trend line will probably hold up as well as resistance. So I don't think we're looking for anything exciting just yet out of USO. TLT, with rising interest rates, it's been sort of an interesting ride at this point for TLT and bonds. What I know is just very, very choppy trading on this chart. We've got a PMO that is starting to rise. But, with this kind of chop, with rising interest rates coming to the forefront, I'm not expecting TLT to do particularly well at this point. And, it's right in the middle of a trading range here that we had back in March and April. And that range is mostly holding. I mean, we did have some dips here below this area of support. But, we're right in the middle of that range. I'm looking for prices to come back down and test that 119 area. I don't see this as certainly an area I'd want to get involved in, mainly because we are sitting right in the middle of a trading range. And so your risk reward here isn't, that exciting. So we'll be watching TLT closely, but that really concludes the DecisionPoint report. So I'm going to show you what we went over. All righty. And, the condition, that's where I look at our indicator sets. Remember, short term is looking still bearish, but rising trend still looks good in the intermediate term, so no corrections. And the big four, there's your summary of what we covered as far as dollar, gold, oil, and bonds. I will have these summary charts up in the Market Watchers Live recap for the day, and there you'll find the timestamps for the YouTube videos as well as these summary charts. Okay, Tom, catch my breath. Time to finish up this program, and yes, there's the weekly schedule coming up, so very exciting week coming up.
Yeah, we got a lot going on. Of course, you got Erin's workshop tomorrow, so definitely you want to come back and check that out. I want to thank everybody for being with us today. Please remember to complete the survey as you exit. We love to get your feedback to hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody. We'll be back here on Tuesday. Take care. Happy trading.
Volatility is back and interest rates are rising. With the markets headed into uncharted waters, ChartCon 2018 is here just in time. See how the experts are protecting themselves and watch live from the comfort of your home or office as they reveal the risk management strategies they use to stay profitable in any market. Plus, you'll get complete video recordings to watch on demand for years to come. Join us at ChartCon 2018, streaming live August 10th and 11th.